What's up, everyone, and welcome back to the channel. Today, we're diving deep into the world of Bitcoin, breaking down the recent price action and figuring out what might be coming next. We've seen some serious volatility lately, so let's cut through the noise and look at the hard data. Whether you're a long-term hodler, a swing trader, or just crypto curious, this analysis is for you. First, let's talk about the chart. Over the past few weeks, Bitcoin has been testing some crucial levels. We saw a significant drop that brought us down to a key support zone, a level that has historically acted as a major battleground between bulls and bears. The big question on everyone's mind is, will this support hold? Looking at the daily chart, we can see the price consolidating in a tight range. This kind of sideways movement often precedes a big move, either up or down. Let's pull up the technical indicators to get a clearer picture. The Relative Strength Index, or RSI, is currently hovering in neutral territory. It's not overbought, nor is it oversold, which suggests the market is waiting for a catalyst. We're also seeing the moving averages start to converge. Specifically, the 50-day moving average is getting closer to the 200-day moving average. Traders are watching this very closely because a crossover could signal a major trend shift. A golden cross would be bullish, while a death cross would be bearish. Right now it's too early to call, but it's a critical indicator to keep on your radar. Now let's talk about trading volume. One interesting thing to note is that the volume during the recent sell-off was quite high, but the volume during the subsequent recovery has been relatively thin. This could suggest a lack of conviction from the bulls. For a sustainable rally, we'd want to see strong volume accompanying the price increase. Without it, any upward move could be short-lived and susceptible to another pullback. We need to see buyers step in with more force to confirm that the bottom is truly in. Let's move on from the charts and talk about what the big players are doing. Whale movements are always a fascinating piece of the puzzle. On-chain data shows some interesting activity. We've seen a number of large wallets, often referred to as whales, moving significant amounts of Bitcoin. Some of this activity appears to be accumulation, with coins moving from exchanges to private wallets. This is typically a bullish sign, as it suggests long-term holding. However, we've also seen some whales depositing Bitcoin onto exchanges, which could indicate they are preparing to sell. It's a mixed bag right now, telling us that even the biggest players are uncertain about the market's next direction. This whale watching is crucial because their actions can create massive waves in the market. Another critical piece of data is liquidation levels. When the price moves sharply, it triggers liquidations for leveraged traders. During the recent drop, we saw billions of dollars in long positions get wiped out. This cascading effect can exaggerate price moves. Now, the market has flushed out a lot of that excess leverage, which is actually a healthy sign for the long term. But where are the new liquidation levels building up? Looking at the heat maps, we can see significant liquidity clustered both above and below the current price. Market makers might try to push the price toward these zones to trigger more liquidations, so be aware of these potential volatility hotspots. We also need to look at the funding rates in the perpetual futures market. Funding rates tell us whether long or short positions are more dominant. Recently, the funding rates have been mostly neutral or slightly negative. A negative funding rate means short sellers are paying long holders, which can sometimes precede a short squeeze and a price pump. The fact that they are not strongly positive shows that the speculative frenzy has cooled down, which is a good foundation for a more sustainable move upwards if the bulls can regain control. Of course, we can't analyze Bitcoin in a vacuum. The macroeconomic environment plays a huge role. All eyes are on central banks, inflation data, and geopolitical news. Recent comments about interest rates have sent ripples through all financial markets, including crypto. Any sign that monetary policy might become more accommodative could be a huge boost for risk assets like Bitcoin. Conversely, a more hawkish stance could put downward pressure on the price. Keep a close watch on upcoming economic reports and policy announcements, as they are likely to be major market movers. So, where do the experts think we're headed? Analyst predictions are all over the place right now, which reflects the current uncertainty. Some prominent technical analysts are pointing to the strong support level we discussed earlier, suggesting that as long as it holds, a rally towards the next major resistance is likely. They see the current price action as a healthy consolidation before the next leg up. On the other hand, some analysts are more cautious. They're pointing to the weak volume and macroeconomic headwinds as reasons to be bearish, suggesting we could see a retest of the recent lows or even break down further. It's important to remember that these are just predictions. No one has a crystal ball. So, let's put it all together. What's the takeaway? The Bitcoin market is at a critical juncture. We have strong technical support holding for now, but a lack of follow-through from buyers. We have a reset in leverage, but significant liquidation levels nearby. And we have a complex macroeconomic picture that could swing the market in either direction. In this kind of environment, it's more important than ever to have a clear strategy and manage your risk. Chasing pumps or panic-selling drops is a recipe for disaster. The key support level to watch is the recent low. If we hold above that, the bulls have a fighting chance. A decisive break below it could open the door for a much deeper correction. On the upside, the first major hurdle is the resistance level formed by the recent highs. A strong break above that, with good volume, would be a very bullish signal and could kick off a new uptrend. For the next few days and weeks, expect more chop and sideways action until we get a clear catalyst. Pay close attention to volume, on-chain data, and the broader financial news. This isn't the time for high-leverage gambles. It's a time for patience and careful observation. The market will eventually show its hand, and those who are prepared will be ready to act. That's our deep dive on Bitcoin for today. It's a complex picture, but hopefully this breakdown gives you a clearer view of the forces at play. Remember to do your own research and never invest more than you can afford to lose. What are your thoughts on Bitcoin's next move? Let me know down in the comments. I read all of them. Thanks so much for watching. If you found this analysis helpful, please hit that like button and consider subscribing for more content like this. It really helps the channel grow. Stay safe, stay informed, and I'll see you in the next video.